Hey guys, welcome back to another episode of Stock Talk with David. I'm David, and in this one we're discussing GoodRX, ticker symbol GDRX. So standard disclaimer, not financial advice, this is just for fun, for education. If you like it, be sure to comment and subscribe. Quick preview, we're just discussing the market overview, really more of the sector than anything. The company operations, how they make money, what makes them better than some of the other guys, the KPIs, the stock metrics, and the trade structures. So let's discuss how they make money. GoodRx makes money through fees that are paid on coupon redemptions, right? So what that means is if you have a medicine that's costing you $100, GoodRx can help you find a pharmacy that will give it to you for $5 or $10, whatever the discount might be. Inside of their service, they have a monthly subscription fee that if you want to have a premium subscription to GoodRx, you can do that. There's some benefits with that. Online telehealth, I believe, is actually bundled into the premium, and that works kind of like a teledoc, just telehealth. And then also there's the advertising portion on the platform, right? Now, what's really cool with GoodRx is they have pricing power over these pharmacies because they can charge how much the pharmacies need to advertise their better deal on their platform. So imagine all the pharmacies competing for each other, and they're essentially putting who has the best deal right there on the front page of the GoodRx platform. So here in this slide, we see that healthcare spending is much higher than any of the other consumer markets. And so you'll see healthcare about $4 trillion compared to education or real estate, around 1.5 to 2.8 trillion. Talk about that more in the next slide. So here we see that healthcare in America is a little bit more on the lower quality side. And this is typically because we have some of the highest costs compared to other economically developed countries, right? People here, citizens here, will pay 2 times more on their healthcare than anywhere else. And then 66% of all personal bankruptcies, I think that number might be a little bit rich, but those are apparently all linked to medical cost, right? So GoodRx is stepping in a major way, helping a ton of people save money and also get the prescriptions that they need to potentially save their lives. And just like we talked about how in America the healthcare system just isn't as good as the other places, part of it is because it hasn't been innovated in the past 20 years. So just like how Netflix took over Blockbuster, we're ripe for disruption. And we also have a huge backlog of patients who did not go to primary care, go to their physicians, and that was due to COVID. And because there's such a backlog, they might have declining health issues. They might also just maybe have let their prescriptions lapse. And so now there's this huge number of people going to the doctor, going to the pharmacy, getting their prescription, meaning that GoodRx has a really high chance of succeeding in this next 3 to 6 month, kind of this reopening play, as we do see the broad market reopening coming back. So moving along to company metrics. Market cap of about 18 billion really means that this thing has room to grow. It's easier to double a small market cap company than it is a large cap, and I think that makes sense. Talking about PEs here, very much a growth story. 242 times forward PE versus the industry at 31 times. We've got EPS growth at 31% versus industry at a little under 15. Revenue growth, I like this one. It's at a little over 40%. Next 12 months, we're making 28 cents a share, and they have a short interest of 9.5 days. Basically means that there is some significant short interest, not a ton, but not a little bit either. Some KPIs. So we have the net promoter score. What this is actually a measure of how likely people are to recommend GoodRx to a friend or whoever. So GoodRx actually has a 90 NPS score compared to Netflix having a 64 or Disney having a 50. And their app has almost 5 stars on the app stores. That's pretty significant. That means that the platform is easy to use, it's accessible, it's not complicated, and that because anybody can use it, little old grandma across the street now can pull up her big iPhone and she can fill out her prescription and she can get her GoodRX, right? So that's pretty cool. Another indicator that I like with this one, I think it's pretty good internally to understand how their business is working, is their recurring usage. So it's just basically a subscription for your prescription. And so the way that it works is you'll get your first fill at the pharmacy using your coupon. And that coupon and that medicine saves to your profile. And now, when time comes that you need your chronic medication, that's going to be right there waiting for you using your coupon. Nothing crazy, not having to go find the coupon again. They're seeing over 80% repeat activity here, and that's really, really good. That means they have a strong recurring revenue base. Again, the consumers are growing at scale here. See, almost every month there's just a new record, a new record, a new record, and that's significant. Year to date, they're up almost 100%. Sorry, year over year, up over 100% in subscriptions. Roughly 20 million visitors, and on their internal site, they've got about 20% increase in brand searches. Revenue, another KPI that we're looking at, they're at a 54% compounded growth rate, and EBITDA, same thing, at 61% compounded growth rate. At that level, it's with high double digits, it's not really sustainable, but because it's a growth story, you might get another 2-3 years of these numbers before they decline to a more normal number, right? EBITDA, same thing. It just means that the company's making money and they're also keeping a lot of money. And that is a very, very strong sign, especially for a growth story. Because typically in growth, you have unprofitable companies, they're making a ton of money, but they're spending it everywhere. They're doing a good job of keeping it and making it, so that's a good sign. I always save technicals for last. That's what we're looking at here. I took this chart just a few moments ago, and so at last check, they're trading at about $43. We've been talking about it since mid-August, and we wrote it down from like 35 to 32, and then we got about 2 or 3 weeks of just really strong buying. And now we're pulling back, we're at that 40 level. And that makes sense because we had such a strong 3 weeks moving into that 48 level. And now we're just consolidating. And so I think at the current level, the best way to play it with the trade structure is going to be buying the 42.5 calls for December and then selling the 55s, giving you a risk reward of about 3.37. Price target here is $60. So when we use all of our formulas, that's what we get. And then we get the BS model showing us 56 actually by the end of the year. And so that just puts 2 to 2 together. It makes a lot of sense. In conclusion, pretty much everything is intact here for the long-term view. There is potential to hit 60 during this hype. They are constantly, almost every month, adding a new product or new service to their app for the free users and the premium users. And the sentiment on Wall Street bets, take this with a grain of salt, but it's actually pretty strong. People are really liking it. They're talking about it. And that's a good sign to get the awareness out among the traders so you can pump up some volume, but also just to understand that people like the company in general. So thank you guys. I hope this video helped you. If it did, be sure to like and subscribe, and we'll see you next week.